What's going on, guys? What's going on? Good afternoon. Good afternoon. It's almost Friday, actually. I'm actually in a pretty good mood right now. The fact that we have Thursday night football, we have basketball going on, the Warriors, the Heat playing tonight. We got Apple kind of bleeding out here just a bit. What else we got? Holy crap, Amazon! Wow, that was a quick drop. Holy damn. Well, it is playing out to pretty much my projection. I mean, just looking at the daily chart here, we got a nice little descending broadening wedge action. So it's just fitting that we ended up going down to the trendline support, but more so we ended up breaking south of that actual wedge. So discussing price action, I guess you could say if you're looking to find out the overall structure here off of the daily, you could basically make the case that we had a nice little head and shoulders here for Amazon. Now let's get out to the larger time frame here. Let's see what's going on with this. That is a disgusting drop. We're about to look like Meta right now. All right, let's see actually the monthly. So off of the monthly here, you can basically see you had a nice little, uh, I want to say a little bear flag type of scenario taking place. You're actually retracing right back to where we initially started a potential breakout from March of 2020. So that's basically where you retrace, which was also your COVID low that you're kind of flirting with here. So if we end up going down towards the COVID low, that would take us down towards 81 half potentially. So about another roughly $10 from current spot. That will put us at our COVID low. And then that'll be the spot where we'll have to determine exactly if we're going to get a nice little bottoming action. By the way, real quick, if you guys can just let me know, I know we had some technical difficulties yesterday, but making sure you guys can hear me, you can also see my screen before I just continue with my little diatribe. But if someone can just give me a yes or no on that, appreciate it. But definitely, like I mentioned, let's see. I would likely anticipate that we get down to the COVID low. The fact that it looks like Amazon is likely suffering, probably more so because of higher expenses. I would assume that's why. And it looks like what I pretty much were talking about, I want to say more towards the beginning of last week. And I was pretty much discussing about the fact that we ha- we weren't going to necessarily look at the fact that whether companies were going to miss or not. I don't think that was the focal point coming into this earnings season. The biggest focal point was how they were going to potentially guide, and that's what I think is the bigger image, the bigger impact that analysts are looking for, and that we already saw Apple's pretty much looking to pretty much guide down. That's the sentiment that we've got in the past few weeks to about a month already. We saw that Meta's forecast looked pretty much horrible. That's what escalated that movement to the overnight. And so now I would anticipate that Amazon, not necessarily that the calls started just yet, but because of the fact that the numbers are already bad as it looks like, I would be interested to see if once their actual earnings call does start, do they have some kind of projected earnings that actually is better than what's expected, in which we could see a potential slight recovery, quote unquote, word is slight recovery, and temporary for that matter, or do they end up guiding down that analysts pretty much end up giving us a bigger sell off, similar to what we saw with Meta? All right. By the way, appreciate that you, Chad. Appreciate that, Renee. Let's see what you guys mentioned. Chad, do you think Amazon's a good buy opportunity at 90? Like I mentioned, I was actually looking for the COVID low. I think we could potentially see that COVID low. That COVID low is sitting right around that 81 to 81 half is what I would say is the spot that I would look to scale in to a position on Amazon. I don't think that you could potentially look to just dive right in right off of earnings here. The best case scenario I would tell you, Chad, on trying to get into Amazon, at least allow Amazon the 3 day rule. And what do I mean by the 3 day rule? It's usually the fact that we end up getting a little bit of digestion, a little bit of analyst ratings coming out within the next day or two after the earnings are reported. So we'll see if more downgrades end up coming out after their earnings today. The fact that it's down $20, a lot of analysts are going to have to readjust their price targets. We're going to see a little bit of potential consolidation if volatility does not kick into the markets. So allow it the 3 day rule. But if I were to tell you exactly the level that I would look to scale into, I think you wait for $81. Look to get in at the COVID low as we see a lot of names just tumbling more so off of the back end of their earnings. I don't think this is more so ideal to just say, you know what, I think it's an oversold territory that I just want to catch a knife. So that's what I think you're kind of getting into that approach of just saying, I want to catch a knife. And I think that's probably you could pose that same exact question to a name like Meta. But at the fact that even though Meta's down, what is this, 25% today, do I want to catch that knife necessarily? Allow with the 3-day rule. Let's see how we get a little bit of digestion. See if the market volatility pretty much flattens out after all of our major tech cap names basically report their earnings for this week. Let's see how we digest all of that on the back end of all of this going on. All right. So that's what I will say about that. But 81 was a spot. We should potentially kind of sit right around this little level right here. But it's going to be upon their earnings call. If they seem to give us a little bit of a lighter forecast for their guidance, I would potentially look to see if this ends up getting a little bit of a bounce back up towards 98 half. But the key question is going to be if it's going to potentially hold that 98 half, or is that going to act as a resistance and we come right back down. All right. Gotcha. I was stuck with Tesla knife as it dropped from 289. That is a really bad thing. I will say that, and don't feel bad about the fact that you got stuck in that knife. You're not the only one to necessarily get stuck in that knife. And I think the most disappointing knife, and I'm not even joking, but I gotta say the most disgusting knife as of right now that it still looks like is if anyone tried to catch that Baba knife for Alibaba. That thing just continues to nosedive. There were people that bought that in the mid 200s, again, pretty much in the mid 100s, thinking that they were averaging down, that it was good valuation, but that just continues to be just a never-ending sell-off. So you're not the only one that's pretty much stuck in that boat. But like I mentioned, just try to apply my strategy, apply the 3-day rule, and then look to see if volatility kicks in or not upon the 3-day rule ending. And that'll give you a little bit more of a better determination if the market's kind of basing or on the back end of all these tech earnings, or do we see more downside that will likely give you a better entry. All right. So it looks like Amazon, I think we covered that again. 98 is pretty much my upside here if we get a little bit of a lighter forecast. Otherwise, I do believe in the next coming days here, if not by tomorrow morning, that we're likely going to trade down to 81. And we'll have to reassess if that $81 actually holds, or do we continue to see more further downside. All right. So that'll be something that I'm sure it'll likely change by morning. I mean, if you actually remember, we looked at Meta yesterday, but that was a completely different 360 that we saw this morning. Because when we woke up, it was down already $30, a lot more than it was yesterday afternoon. All right. So let's see if we can glance back at Apple. Anything that's changed on Apple here? So not much of noise on Apple just yet. It looks like we're kind of still stalling out. If I dial down in towards, I want to say roughly the 2 hours where I had this little wedge going on, so just to be so basically conservative, we have a nice little falling wedge action that took place on Apple. You can basically see dating back towards Friday, we had a nice little breakout from the 21st. We ended up basically making a nice little move to the upside, tracing up towards 152 half roughly, and we've basically given back about almost all of that move that we retraced. So if we end up dropping, I'm looking to potentially see if we retest that prior downtrend break as a support as we broke out of it as a resistance previously. That'll take us down to 141 as we're kind of closing in on here after hours. Or if we end up breaking below 141 on Apple, that's going to mean this entire little structure here is going to be invalidated, and this is going to be a much larger degree breakdown than we most so anticipate. All right. Now, if I'll wait for the move to pretty much particularly happen, to be honest with you, but if I'm gonna dial out to the monthly just to give you a bigger and broader picture, I could probably go out to the monthly. Let's see if that's a little bit too far of a time frame. Let's see if we could dial back into the weekly. I think the weekly probably gives you a better image. Yeah. So I would anticipate if we do end up breaking down, and this is pretty much looking towards, worst case scenario, already knowing the fact that the sales were already pretty much slowed down for Apple. We already know the circumstances that were being applied, their production basically being cut. But the key level that I would particularly watch if we end up starting to break down here will be right around 127. 127 is going to be that level I do particularly watch, and that's going to be if this is going to be some significant downside this afternoon. As of right now, it's kind of just creeping down, just about $2.50. I don't think that 2% move is much to do anything yet, so I'm assuming the numbers are not really being impacted just yet. But that 127 mark is a number that I think is more favorable. And that will basically retrace to where this stock actually took off, dating back towards June of 2021. So just looking to basically retrace to where the significant points of where most of these rallies just began, that looks like to be the more consistent thing that we're looking at across the board for a lot of these names as they continue to just drop off these past few weeks here. All right. So 127, that's the more significant level. Otherwise, if we're just looking for a smaller degree move here and we maybe don't even get that much of a move, I think that we're looking at 133 to the downside, and that would be my conservative downside price action to this. All right. But we can already see we rejected the 20 EMA, we rejected the 50 EMA sitting up here at this 151 and a half spot. And so I would anticipate that's going to be heavy resistance. I don't see for within the coming days, coming weeks here that we're likely going to make our way up towards that level unless Apple does something shocking that it lifts the entire market with it. All right. So that's looking at Apple. Let's kind of just dig into SPY, and then I will get into Renee, the name that you mentioned, APRN. We'll take a peep at it. All right. But just to give you guys a quick little peep of what I was watching, biggest thing that kind of stood out to me was off of the weekly on SPY. Watching the 20 EMA basically acting as a resistance so far this week, and that was at the 388.69 level, which was basically pointing towards our high that we had yesterday, and we've basically regressed off of right now. So that 388 level, right now, it is acting as a resistance. I was watching the fact that if we were to break north of 385 during intraday price action today, that we could have had a little bit more of a bigger push, but that was not the factor today. So 385 still remains to be that big level for me. If we do end up trying to push up, right, and retest that 20 EMA, I do believe that we need to reclaim over 385. That'll be pretty much looking for the upside. But as it is pointing to right now, we already see SPY already down almost $4 now, with just Amazon pretty much pointing down. I'm gonna watch support down towards 372 here. That's my next key pivotal level of support. So I would not be surprised by morning if the fact that we do hold on SPY, we continue to see Apple regressing with Amazon already down and bringing down the rest of the market here. It's not pretty much out of the question that we can pretty much open up right around 373, just under 373. I have 372.68 is that to be exact is the level that I'm watching here for support. So that's what I'm going to be targeting for tomorrow morning if we don't reach there by the opening bell. Below the 372, then that's going to set up much rash, no, I want to say rash, but more volatile conditions for the broader market. And then that's going to take us down towards 367.34. So the fact that we continue to escalate to the downside, SPY now down about 4%. Well, not 4%, but 4 points here. It does tell me that we have pretty much strong indications that we will trade down to 372.68. Watch for a potential support there. If that doesn't hold, then we should trade down to 367.34, and we might be getting close enough to being down double digits tomorrow if in fact this does continue to weigh to the downside. All right. But that's basically the two pivotal levels below the 367.34 if for whatever reason we continue to escalate to the downside. Next pivotal level will be 365.34 that I have as well. All right. So that's pretty much just looking at that levels. Let's see if there's been any kind of noise on Apple here. So Apple's still kind of holding flat. Let's see if there's any escalation on Amazon. And Amazon's still holding. So not much of pretty much altered. It just looks like the impact of Amazon right now is what's weighing on the market from a broader perspective. All right. Let's see. Bearish for Apple. Don't think many people have extra cash to spend on more extra luxury product like newer phones. Chad, to be honest with you, as much as your statement is actually correct about people not having money, I do believe the bigger impact on that is just the fact that the innovative creations that Apple has done historically, I don't think it was particularly there for this year. That's pretty much the fact that the Apple Watch, outside of I think the $800 watch that they created, there wasn't pretty much any significant changes that really did any kind of attraction. Had they actually done something more creative, done something that was more appealing to pretty much everyone, then I think that they would have saw better circumstances. But I think there was even someone that actually came out and said, basically that the phone looked exactly like it did last year. There just wasn't too much that changed. So it's just a matter of creativity. I think that more so impacted it because they literally just slapped the same phone and they just made some small little tweaks that really were not very impactful. All right, but that's what I think more so it is. I don't think it's more so the fact that people didn't have money, even though with inflation being here, that does play a big X factor. All right, let's see if I can actually take a look, Renee. So I do not forget again. Let's take a look at APRN, Blue Apron. Let's see what's going on with Blue Apron. Let's see if I dial in. So weekly kind of shows me a little bit of a pennant action kind of play taking place here. Let's dial into the daily chart and see what's going on for daily. So clear as day to me here is a nice little head and shoulders action that's playing out. You had the head and the left shoulder, you had the head, and you had the right shoulder. So a clear gap down that occurred from the beginning of the month on October 3rd, and then you've been on a steady decline ever since then. So what it's pretty much showing me right now is that you have a nice little bear flag kind of scenario that's setting up here. And that's what pretty much caused your little bit of a decline today as well, as you do end up breaking down below this little bear flag scenario. So this is the bear flag that I'm looking at. If I kind of just zoom in as much as I can there for you, that's the bear flag scenario. You do have earnings that are coming up on November 4th. I would anticipate likely going into that earnings here. You're going to trade down to about just under right around 2.25 is what I'm looking at. 2.27 is the level of support that I have that's currently sitting, and we'll look to see if you can consolidate around 227 going into their earnings. So earnings is pretty much going to be the bigger catalyst to see if this ends up continuing to break down below 227, or do you see that base going into earnings at 227, and then you could potentially get a nice little pop action. But that's going to be very contingent upon the fact of how the earnings are going to play out. I know this has been a relatively a very know, name that's been popular to be giving a lot of squeezes. So it's more so of a squeeze ticker, in my opinion, especially when it's been relatively news based. But right now, going into earnings, it's not a name that I feel very comfortable owning at the very spot that it's sitting in. If I were to tell you what spot I would prefer to get in an entry on, I would look for this to be under right around 215, 214 is where I would say you look to maybe get a small little entry on this, and not particularly on options. I would do it with shares. All right. So that's what I would look at for that. Let's take a look around the markets. Let's see what's going on. We can pretty much see right now, probably down into the 2 hours, so you can actually see my structure that's going on. But a nice little megaphone action taking place on Tesla. We see it's down about almost what about a percent and a half going right now. Let's take a look at Microsoft. Microsoft, same thing, down about a percent and a half. Let's continue down the list. Nvidia, down almost 3%. Amazon still holding. Has Apple actually gone green? No, it has not. So Apple continues to weigh down, relatively flat to red here. Not much that I think is going to be considerably noticeable just yet until the earnings call likely starts. And I believe that's more so with the cut in production for Apple and pretty much their forecast. That's likely what's going to be the biggest X factor to see if the market continues to escalate into this red territory that we're in right now, or do we see a bigger recovery for Apple, which would give the broader market, a little bit of relief. So I think that is left to be determined on their earnings call, how they end up giving the guidance and relating relation to their production moving forward for the iPhone, and that'll likely give us a little bit of a better landscape for how the market's setting up for tomorrow. All right. So not much else I think across the board in terms of news here that's really giving us a factor. Let's see exactly how this ends up playing out in terms of just going into tomorrow. Or as of right now, it does point bearish. Now the fact that again Apple's going to play the biggest factor in all of this, I would look to see how much we end up pressing into this low going into tonight. 372 half, which is at 372.68, is that support that I'll watch. We'll see if we end up getting a bounce at that level. And then if we end up getting a bounce, look to pretty much be prepared to get into a short, which is roughly right around 374 half. And if we can get a short at 374 half tomorrow, I think that's when we'll take this right back under 372.68, and we can get a nice little ride to the downside towards 367. That's ideally what the picture is that it's just giving me in terms of an image right now going into tomorrow. But again, Apple will basically be that X factor that can change the landscape. But that would particularly be my game plan as of right now. Looking to see how Amazon's basically dragging the broader market to the downside. Look to pretty much hold that support at 372 half. We pretty much look for the entry around mid 374, and then this should trade right back down under 370 tomorrow. Is what I likely anticipate. All right. So that would pretty much be my pointer for you guys, just to give you a little bit of a heads up. But let's see what Apple does, and that's where you'll have to make the determination by morning and see exactly how that game plan pretty much changes. All right. But other than that, I guess there's not too much else to pretty much discuss. I will leave it as is. Again, appreciate you guys joining as always. Hopefully, I was able to give you a little bit of a better image, clearer image of kind of the things that's just going on across the board. And then also knowing how to scale into these long-term positions, especially after seeing the disaster of from Meta and now from Amazon. All right. But you guys all have a great afternoon, great evening. I will see you guys on live tomorrow morning. But I'm out. Later.